Thursday, January 4th, 2018, Monaco 64, home of alternative economics and contrarian views. So will China deliver a knockout blow to the petrodollar finally? Well, I made a couple of videos already, part 1 and 2 of the same subject last year, one in September and one in October, and I'll put them up in the cards for the YouTube viewers. For the other viewers, I'll put them up in the description for the DTube and the Steemit viewers. So this is kind of like a part 3. And why is that? Well, there's a recent story on Bloomberg.com from January 1st this year, and it says how China will shake up the oil futures market. Well, the only thing is going to shake up the oil futures market, but it could have a huge implication, of course, for the dollar as well, mainly because the dollar has been used as the only currency to settle accounts in oil. And so that's, since the mid-70s and the Petrodollar agreement between the U.S. administration and the Saudis, which was negotiated by Henry Kissinger. So that has led to, the dollar being remaining a reserve currency in spite of the fact that Richard Nixon took the dollar off the gold standard and the dollar became a fiat currency. So the dollar is still, countries still maintain foreign reserves. 2/3 of it are still in dollars. I'm not saying that's going to end overnight, but this is a challenge to dollar hegemony. And in my opinion, it could be a blessing in disguise for Americans. Maybe not for the American, military industrial complex, because they've been able to use the dollar as an instrument of aggression, and also being able to expand business abroad. They don't have to earn foreign currencies to start businesses abroad because people want dollars. So, maybe not for them. And even for the general public in America, it might at first hurt, because if the dollar is in less demand, then it has been, that means that the dollar will be worth less. The government, U.S. government, will have to pay more to borrow money because there's going to be less foreigners demanding dollars to pay for oil. This article points out, for example, that China surpassed the U.S. as the world's biggest crude oil importer last year. So China now dominates the crude oil market. So what does it say, the article? It says China, the world's biggest oil buyer, is on the verge of opening a domestic market to trade futures contracts. It's been planning one for years, only to encounter delays. The Shanghai International Energy Exchange, a unit of Shanghai Futures Exchange, will be known by the acronym INE, and will allow Chinese buyers to lock in oil prices and pay in local currencies. And it goes on to say, this is an important part. Also, foreign traders will be allowed to invest first for China's commodities markets, because the exchange is registered in Shanghai's free trade zone. There are implications for the US dollar's well-established role as the global currency of the oil market. Not only of the oil market, but all other commodities. And it says, when will trading begin? And I have to say, I have been on the Shanghai International Energies Exchange, or the INE.cn, if you want to look at INE.cn. And there's very little information. The latest news was from July. You can look, though, at the contract. They do have the contract description. They haven't got any more information, so they're being quite coy. It's going to be like the NYMEX futures contract is going to be 1,000 barrels per contract. So they're going to keep the same structure as amount of oil. Of course, it's not going to be based in dollars. It's going to be based in yuan. Yeah, have a look at the website. The website is there. The latest news I see here is from July 13th. This Bloomberg article says, according to the Shanghai-based news portal Jinyan, which cited an unidentified person from a futures company, trading is expected to start January 18th, 2018. Well, it's weird. The Chinese like their number 8. So they're going to start on January 18th, which 2018. Maybe they think that's good luck. Multiple rounds of testing have been carried out and all listing requirements met. The State Council, China's cabinet, was said to have given its approval in December, one of the final regulatory hurdles. The push for oil futures gained impetus in 2017 when China surpassed the U.S. as the world's biggest crude importer. So, what else? Well, I saw the other day that a story somewhere, forget, I read so much stuff, but you can probably check it out. Just Google. Russia just completed a second pipeline over the new year, or the last few months of the year, into China, oil pipeline. So they're going to be able to send twice as much oil as they been regularly sending. I also, there's also, I've spoken before about how the INE, the energy exchange, the contract, foreigners will sell their oil, let's say Russia to China, and they'll get yuan. They might want to keep the yuan, the Russians, or they might want to sell it, convert it to gold. And they do have a Shanghai gold exchange, and they can convert to physical gold. They've opened, the Central Bank of Russia has even opened a branch office in China. I'm not sure if it's big. I think it's in Beijing. So it's all set up for the Russians at least. And you've got this old Silk Road, one belt, one way. The Chinese trying to increase trade throughout Asia and the Middle East. So, and there's also the fact that the Chinese are getting closer to the Saudi family. It looks like they could be a big part of the IPO for Saudi Aramco, which is the biggest oil firm in the world, oil company in the world, which is owned by the Saudi government. So it all kind of starts to fit in. A lot of people, when I made the first video, they said, oh, we've got no proof of this. They haven't announced that they're going to start the yuan, that they're going to want to dethrone the dollar. But I think this has been done more gradually and through the market. A lot of people say, yeah, the Chinese are communists. They don't like freedom. But I have to say they are into their markets. I know there might be suppression or in China, and political freedom is not maybe what it is in the West. But I even question if we sometimes have political freedom with all the how can I say, fake news we get, the mainstream media. A lot of times they don't need to oppress political views here because we're so brainwashed. So what I'm trying to say is that China is very business oriented. So I think they will do well from this contract. And will it dethrone the dollar overnight? No. I mean, the dollar is still, I still even have, look at things and think of it in dollars. I look at prices in dollars. I would probably rather receive a dollar payment than a yuan payment, only because people are more used to dollars. So it's going to take a while, but it's going to impact the dollar, definitely. Yeah, that's what I wanted to talk about. Yeah, let's look at what the markets are doing this morning. So it's 9:30 a.m. London, and gold, of course, last night London time, it was at around 2 p.m. New York. I think they published the minutes of the Federal Reserve meeting in December, and there's always shenanigans in the gold market when that happens. So gold duly dropped from around 13.17 to a low of around 13.18, only because apparently there's a comment that some of the FOMC members want faster rate hikes because of financial assets are getting inflated. So gold and silver went down, but the Dow, went up 94 or 95 points. I think, I'm not sure. So when they just focus on gold, but the fact that they're also worried about financial bubble actually helped the Dow. It should have hurt the Dow if it's going to hurt gold. And this morning, overnight, because gold actually rebounded after that last night, it went back up to around 13.16, so it did quite well. But then overnight again, when the COMEX reopened, we traded down, and we've been as low as 13.06 roughly. But now, as I speak here, we're at 13.13, so gold is holding fairly well. And that's in spite of the dollar strengthening a little bit yesterday against the euro and the pound. Silver overnight dropped just below as well, $17. Low was $16.98, and we're now at $17.14. So that's pretty good so far. I mean, gold has been going up almost every day, as I said earlier, I think in the previous recent video, since the middle of December. So this is the first time we've seen it correct a little bit, and it's still near the recent highs. The Dow is up 50 points, no surprise there. The NASDAQ is up 12, and the S&P is up 0.50. Currencies, we're seeing the pound and the euro rebound a little bit. They're both up 0.2%. Crude oil is doing really well. It's at 61.80, the WTI crude. The front month up 0.5%. So that's signaling, a weaker dollar, in my opinion. Cryptocurrencies, yeah, what do we got here? Bitcoin down to 14,500, so still consolidating. Ethereum, 926, got up to 950 in the last 24 hours. I've seen EOS has moved a little bit. It was languishing yesterday around $8, and it's got up to $10.60 overnight, and it's now $9.50. The other one people are looking at, alt token or currency, is Cardano, which people kind of jumbled together with EOS. They have done very well. Their market cap now is 38 billion, and EOS is only 9.4 billion. I don't have a position in Cardano. That's up 14%. And yeah, and that's about it. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. And also follow me on steemit.com, dtube.com, and on Twitter. I'll talk to you later. Bye.